G'day guys, my name's Craig Cobb from the Grow Me Co. I've been trading for 20 years and in this chapter I'm going to be taking you through the anatomy of candlesticks to help you to understand reading price action. In fact, sometimes you don't even need to have indicators or anything else on the chart to be able to understand the simplicity of what a market is actually telling you. And everything you'll learn within this series, please watch the rest of it. It's brought to you by BloFin. Make sure that you understand that this whole series is about layering things together. And a part of reading price action is to understand what a candlestick is telling us. And I'm not talking about giving it a name like a hammer or a doji or a crow or a kettle, anything like that. No, you see, everything that I'm implementing to you and teaching to you from my 20 years of trading experience and 15 years of being good at it is to help you understand what's going on. You see, far too much emphasis is put on the names of certain things in markets when the education and the true understanding is when we know what's being presented to us, why we're seeing certain things. And I look at markets like a language. If you go to Portugal and you don't speak Spanish or whatever it is they speak, oh God, I stuffed that up. If you go to Spain and you don't speak Spanish and they don't speak English, it's going to be very difficult to communicate. Well, the markets are the same thing. If we look at the markets and we don't really know what the markets are telling us, it becomes very, very difficult for us to truly know what's going on and to communicate within the environment that we put ourselves. Now, if you're a trader or an investor, you're going to need to have some idea of what's going on so that you can make your own decisions, whether it be to get into a trade, get out of a trade, to buy an investment, to sell an investment, and how to manage your risk. And candlesticks play a big part in this process. So I'm going to spend my time on the candlesticks right now. And again, it's just price measured by time. Another indication of that is how we read a candlestick. Now, we've got two types of candlesticks. We've got a buyer and a seller candlestick, and the information that's being presented to you right now is quite simple. Okay, and let's not overcomplicate something that is simple. And I find that to be an issue with many, many people is that they overcomplicate things, and you just really don't need to. The information that a candlestick is telling you, depending on how you set up your chart, realistically, most of the time you're going to have the candle be green if it's closed higher than where it opened, which means it's opened over here, it's closed over here. The representation of the color green means it closed higher than where it opened. That's the first bit of information. Then you've got these, what they call wicks. You've got what they call wicks, and there's a low wick and there's a high wick. Now, these wicks are incredibly important because it's a part of the story of what the candlestick is telling us. In this particular case, the candlestick opened here, it ended up closing here, but it traveled to a high point up here and a low point down here. So however that happened, it's not really of that much importance. What is important is what we end up with. When the candle closes, we have got ourselves a green candle. So we've got the terminology is the entire candle is called the range. Okay, now I'm not going to really use this terminology at all because when I read a candlestick and when I use a candlestick in my trading, I'm always taking into account the entire candlestick. The body does come into it, and we'll talk about that in just a moment. Your seller candlestick is quite naturally the same thing, but it is slightly different in the sense that it is red. It opened at a certain price, it closed at a certain price, and the representation of the color red means that it closed lower than where it opened. Don't overcomplicate that. You still have an upper wick, you still have a lower wick, and you still have what we call the range. And as you can see, price moved higher. It was green at one stage, and it moved lower than where it ended up closing, but ultimately it closed lower than where it opened. Now, I'm not going to dwell too much more on the actual candlesticks and the nature of the candlestick because sometimes I think we talk too much. That is all you need to know when it comes to candlesticks for this moment in time. Now we're going to look at some of the other areas or other things that are important for us with candlesticks. There are only three types of candlesticks that really, truly matter. And there's loads of books and whatnot and courses and everything about candlesticks that you really don't need to know. In fact, it's the authors that do well out of this and generally not the individual, as it does cause confusion. I've just shown you the anatomy of a candlestick, and now I'm going to teach you about what it's actually telling us, okay? What we're looking at is to trade the candlestick inside of a trading strategy. Now, if you want to go ahead and learn all of the names of every single candlestick and every single chart pattern and everything like that, and you want to be a master of retention of naming rights, then you go ahead and do that. You probably don't want to watch this stuff, or you don't want to do my course, and you don't want to go through this YouTube tutorial session, because I'm not going to be teaching that because it's nonsense. It doesn't mean anything. The meaning is in what you are being told. What is the candlestick actually telling you? That's what you're going to be teaching you. It's a waste of time and focus to do this. We need to keep it simple and focus on what is, as opposed to remembering the names. This trading, successful trading, is not a game of retention. It's a game of understanding, okay, and listening. Now, we've got three types of candles that matters. We've got these ones over here on the left-hand side. The buyers are in control. And in this case, of course, we've got three candles that are all green, which means they close higher than where they open, which is what we just learned a moment ago. We've got this one here where the sellers are in control because they closed down. They are red. And then we've got these types of candles that are indecisive. Now, when it comes to the way that I trade and the way that I'm going to be teaching you is this. When it comes to the indecision, this is a candle we do not use at all. If you see a candle that cannot make its mind up, well, then neither should you. If you can't work out because the candle's not telling you whether it moved higher or lower with any real significance or momentum, if it means nothing to the candle itself, i.e. it's going, Craig, I don't know, then you should also be saying to yourself, I don't know, and you should be leaving them alone. Indecision is where you jam up. It's where confusion comes in. It's where frustration comes in. And when frustration comes in, emotions come in, and emotions are not where we want to be when we're operating within a highly volatile market like the crypto market. Okay, so what we're looking at is not the name. We are asking ourselves the age-old question that you'll see frequently throughout this series of who is actually in control. So in this case, the green ones over here, buyers are in control, and over there, the sellers are in control. Now you'll notice that there are three different types of candles here as well. We have a small bullish candle, we have a large bullish candle, and we've got a bullish candle here that has a little bit of a journey, a bit of a story to tell. And the same thing can be said over here when the sellers are in charge on that bearish side of that. Now, the story of what the candle is telling you is important. And I just want to back this away, and I just want to do a drawing for you. Okay, I think this will help in a big way. Now, my pen is red. So we're gonna use a seller candle as an example here. Here is a seller candle. It's a small seller candle, okay? There's our full candle. It's a red candle, which means that the price closed lower than where it opened. That's easy. It's a small bearish candle. Here is a big bearish candle. It is a big red candle, and you can see all the information there. Then we've got, with both of these, we'll use them differently. I'll trade a small candle. I won't trade a big candle, but the one that I wanted to really emphasize is this one here. We have a red candle. We know that. But this candle tells us a little bit more for those of you who are able to actually read what it is telling you. And I'm going to show you how to read what it is telling you. This candle, despite the fact that it closed down, it's a more significant and powerful candle. Why? Well, because of the journey, the story that it has to tell. At one stage, this candle opened here and it traded up here. It was a green candle. The buyers were in control of that candle for a period of time. However, what then happened was the sellers came back in. They went, nah, it came up and hit some level or whatever it may be. It doesn't even have to have a level or anything like that. It sold off. A relatively decent sized green candle, buyers were in control of it for a period of time. Now, let's just say that that candle is a 60-minute candle. At some point within that candle's lifespan, it was green. The sellers came back in and went, no, you don't. Bang, 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 driving the price down. Now, it hit a low down here, but it ended up closing here. Now, what this candle has in additional information to me, because I know what I'm looking at, and so now do you, is that the sellers are really in control of this candle because they were tested, man. This candle at one stage, as I said, was a nice big green candle, but the sellers put a stop to that. Meaning the journey of this candle went from the bulls back to the bears with a fair bit of power. You know, it rejected these highs significantly to drive the price all the way back down to close at this level. Now, this candle does hold a little bit more weight because it does tell that additional journey. Whereas this candle opened here and closed here, it was a strong seller candle, boom. It is what it is. This candle here opened here and closed here, it was a small seller candle, boom. This one tells us more of a journey because price was up, the sellers returned and drove it back down. Now, of course, in a bullish scenario, it's the other way around. You have a candle that has a rejection of the lows. Now, you can commonly find all sorts of different names for these types of things. I don't care about the name because the name's a waste of space in your brain. Understanding what the candlestick is telling you is where the importance really lies. Now, let me get rid of my pretty drawings. Actually, I'm going to move to the next slide. Let's do that. There we go. Makes it a little bit easier. Now, as I said before, I kind of covered this just then with my pretty pictures, but these are the candles that are bullish. These two are bullish. Now, you might not be also asking yourself, well, hang on, Craig, that candle is red. How can that be bullish? For the exact same reason I just gave. I just explained it to you. This candle, yes, it may be red, but don't forget at one stage it was very big and red. The buyers came back. The momentum for that period of time is back to the upside, back to the buyers. Much easier in this green candle. At one stage, it was a big red candle. The buyers came back and it closed up. Understanding what the candle is telling you, understanding its journey is going to be far more beneficial to you than understanding the name of a doji or a hammer or whatever, because none of these things actually matter. When it comes to making decisions, you need to understand the information being presented, not just the name of something. Okay, it's really, really important in that regard. Of course, on the flip side, I gave the example of that as well. We've got buyers that came in, the sellers came back in, and it dominated the market. Now, the final thing that I wanted to touch on here with candlesticks is the size actually of importance? And yeah, it is. Now, the way that I trade with the cradle strategy, what you've got here is you need to have a small candle. It needs to be a small candle. So what is a small candle? When we've got big candles like this and this and these, that's when the volatility has already increased. We want to be entering into trades when the volatility is not wild. We want to be capturing that wild volatility when it comes and be taking our profits along the way. So having a small candle is a much better way of doing things. And the reason is that when we're looking to place a trade, we're looking for a place to have a stop loss, a point at which we're wrong, a point at which we get out of the trade. Now, as we go through, you'll start to piece things together. As we layer things together, you'll understand. And if you've been through my full program, you'll know exactly what I'm talking about here. But looking for small candles means that we're looking at a market before it has moved. And that's what we're looking for. As we overlay things like trend, as we overlay things like moving averages and an indicator that we use in the MACD, we start to layer in as well the size of the candle in collaboration with all these different things to start to build a picture, to build a strategy, to build a checklist that we can execute flawlessly time and time again. It's a small candle that we're looking for to execute a long or a short, not a big candle. So how do we decide whether it's a small candle? Because everything's relevant, right? Absolutely, everything is relevant. Well, if you look at the last 20 candles, you'll get a pretty good indication as to whether that candle, the current candle now, because don't forget it's only the one to the right-hand side that we can actually trade from. I can't trade on this candle over here. Excuse me, it's already over and done with. So what I can do is I'm comparing the candle right here, that is my potential trading opportunity, with the last 20 or so candles. And I'm just doing a real quick glimpse at that and looking at the candle and going, is it too big? If the candle is not looking like it's really big, like that's a pretty big candle, I'd say that's pretty big, that's pretty big. Here's the thing, if it's not a big candle, it's a small candle. If it doesn't jump out at you and scream, I'm a big candle, it's probably small enough. Think of it like this. This is the example that I use in my course as well. When you go to the park and, there's lots of dogs in the park, and then all of a sudden there's just this giant dog. You go, holy dooly. That is a really big dog. Excuse me. That is a really big dog. Why is it a big dog? Well, it's clearly a big dog. It's obvious. It's a holy moly. That is a big dog moment. That's how you look at your charts. That's how you look at your candlesticks. If you are not seeing a candlestick that is clearly a big dog, it's probably a little dog and it's probably fine. Guys, don't forget, this is sponsored by BloFin. I trade with BloFin. If you want to trade with BloFin, use the link below in the description here to sign up for your BloFin account. You'll also see within this series order raising examples of how to actually manage your risk and trade using the BloFin platform. That is candlesticks. And as you can see, we are layering things together to come out the other end with a bit of a trading strategy that you can apply right away and you can build yourself. Have a good one. I'll get on to the next video. Bye for now.